One of the greatest investors in history is currently doing nothing. Warren Buffett, in one of his final quarters as CEO of Berkshire Hathaway, is choosing a deliberate path of inaction. He is currently sitting on $381 billion worth of cash. Sorry, that's my dog. He didn't repurchase any shares and he sold equities, not bought them. So what does this all mean for us as normal investors? Hi, if you're new here, I'm Charlie. I hit $1 million in net worth by the time I was 35, and I'm here to help you demystify all things investing and the stock market so that you can build real wealth that actually lasts and not give in to all the hype. So what are the key takeaways that we can decode from the fact that one of the greatest investors in history is currently hoarding cash? To me, first of all, it means that patience is a strategy. Sometimes I feel like we always have this pressure on us to be doing something with our money. There's always that temptation to constantly trade or chase trends or deploy every single dollar so that it's doing something. For me, what Warren is doing is genius, because as long as you continue dollar cost averaging into your current investment accounts and your retirement accounts, then anything above and beyond that right now, because the market is so inflated, I would just hang on to it. That way you're building your cash reserves for a truly golden opportunity, whether that's a market downturn, a crash, a real estate deal, or a personal investment that you're looking at. And let me just clarify that your cash hoard does not have to be billions. I think I can safely say that for most of us, we would never be in that situation. But it's always good to have a healthy fund above and beyond your emergency fund that you can kind of just hang on to for a rainy day or when the right opportunity presents itself. The other takeaway from this, from my perspective, is that the businesses that Warren and Berkshire invest in are actually whole businesses that fuel the economy. Things like insurance, railroads, energy companies. These things are deeply embedded into the real economy, and their performance is a barometer of our economic health in the US right now. So as an investor, to me, that means that the strong earnings that Berkshire has gotten from these investments suggest that despite market volatility, the foundational parts of our economy continue to produce value. It's easy to get lost in the daily swing of the stock market. We can become fixated on our portfolio's value, but lose sight of the fact that every stock ticker is a real business. And I'm just as guilty of this. But to me, Buffett's model is a testament of owning productive assets. For the individual investor like you and I, this just reinforces the importance of focusing on the fundamentals. When you buy a stock, you're essentially buying a piece of a business. So you want to make sure for your own future that that business is sustainable, that it's durable, that it's going to be around for a long time, right? Look at, does it have a competitive advantage? Does it have real cash flow? Some of these crypto and AI businesses, their valuations are insane, but there's actually no productivity. There's no value behind it. There's no money behind it. It's me personally, I'm not comfortable investing my hard-earned money into those types of companies. Totally fine if you do. Everybody's different. But for me, focusing on the business and not just the stock price has been a cornerstone of my long-term investment strategy. Now, the market has already reacted to this news, with Berkshire's stock having a pullback that some attribute to what's called the Buffett premium, which is just the extra value that investors place on the company simply because he is the CEO. I think this news of Buffett hoarding cash and having Berkshire transition to a new CEO soon just reminds us that the fundamentals are, and this is another of my dogs, sorry. Just reminds us that the principles of investing are timeless. Understand the businesses that you own and construct a financial plan that is bigger than any one person. The market's always going to be volatile. Nobody's going to change that. But I think a strategy that's built on patience, fundamental values, and foresight will always be valuable and will always endure. If you found this video helpful, follow, like, and comment any questions you have.